So what can we say about equities and the US election? Is it very easy or is it very difficult to predict what's going to happen? So if we step back for a minute, looking at all the various research publications that have been done on this topic, it's very clear that there is no significant statistics on what will happen with the US equity market depending on who wins the White House. And what's more important, even if we don't have a divided Congress or we have a clear Congress, it doesn't even have any statistical significance. So is this just noise or what is it? Well, I think if we look at some few points here on the US election, I think there are some things that we can tell. Right now it looks like Clinton will win the election based on the majority of the polls. That's at least what everyone is expecting right now. You can see that from very big underperformance of healthcare stocks. It's quite clear that the Democratic Party is very negative towards the healthcare sector. They want to curb drug prices, even though it's going to be tough. But what we can see is that as Hillary Clinton have gone up in the polls, you have seen more and more underperformance from healthcare stocks. If we get a Democratic White House and a Senate majority for the Democrats, which is quite likely, and we get some Democratic more seats in the House of Representatives, then that will likely pave a way for a more harsh stance against healthcare. And I think short term we'll see more negative sentiment towards the healthcare sector. So obviously, and the best way to play this is through the sector ETFs. If we look at the S&P 500, our view is that if we get a Trump victory, that will be the biggest surprise. It will be the unthinkable based on where the consensus is right now. And we think it could be very negative, very short term for equities. A little bit medium term, if he succeeds by doing his big corporate tax reform, that would be a big boost to equities in our view. If Hillary wins, we get more of the same, the establishment, we know her policies. We don't think it will be any material impact on equities on the short term. A little bit more medium term, we know she wants to introduce the Buffett Rule where she imposed higher tax rates, a lot of brackets on the higher incomes. That could be negative for investor sentiment, and a little bit medium term that might spill into negative investor sentiment. In terms of financials, which is also a very interesting sector to watch during this election, is that we know that the Democratic Party is has a much more hard stance towards the finance sector. They want to do more regulation. So if it becomes a Hillary victory, we think that could spill some more negative sentiment for this sector. Obviously, that could be offset by the Fed, which we are expecting to hike rates in December and probably also doing a couple of more rate hikes if the economy continues to improve in 2017. So the effect might not be as big as it could potentially have been. But nevertheless, in the short term, we think it could be negative for financials. If also Clinton wins, we know that the capital goods sector might stand to win from all of this, because the Democratic Party with Hillary Clinton has a campaign platform that wants to add $275 billion to infrastructure investment through a corporate tax reform. That would be positive for the sector that delivers machinery, equipment to build new roads, highways, subways, whatever you can imagine in terms of infrastructure. Our final idea and the way to play the equity market is to sort of set your portfolio up for the unthinkable. So if Trump wins, what's the best way to play this in the market? So there's several ways. You could either buy a put option on the S&P 500. They are still not very expensive. I think you pay around 2.5% premium for January or February expiry at the money put options. I think that's a decent premium to pay for a potential larger setback in equities should Trump win. Another one is playing the Mexican equity market. So Mexican equities have done tremendously well in local currencies, and lately over the past couple of years in US dollar terms not done so well, and they are very negatively correlated to a Trump victory. So if Trump wins, we know it's going to be bad for the Mexican pesos. He wants to renegotiate the NAFTA. It's going to likely be negative in terms of sentiment for Mexican equity markets, and the best way to play that is through the country ETF, which you can find in the Saxo Trader platform. Just type in Mexico ETF and you will find it there, and that's the best way to get access to this equity market.